So this is the setup that I wanted to show y'all that I sent you in the screenshot. Um, this is the CAD, UsdCad. Well, this is called the naked chart. Naked chart means there's no indicators, there's no nothing on there. I want you guys to learn how to look at that so you can see patterns automatically like this. They've been sending a lot of head and shoulders patterns. I've seen them too. Here's the head and shoulders. This is a 1 hour chart. Head and shoulders. You can see that right now. But before you just had, nothing. What I want to show you guys is this quick, simple setup. This is a Bollinger Band ATR CCI. And what the ATR is the average true range. What I was telling you about when how they calculate volatility. So you see down here, that's ATR of 17 pips, meaning that within a 1 hour range, one of these candles usually trade within 17 pips over 10 bars. Now, of course, in this area from here to here, it was more than 17 pips that it dropped or whatever. But it dropped 17 pips within a downtrend. It's called a downtrend. This is called consolidation. You see how the price really just stayed within a range here, but it still that's formed a shoulder. Now this is a strategy that I use with the Bollinger Bands. You see how it pierced the Bollinger Bands, and usually when it pierces, it'll drop. It usually retraces back to the mean. That's what they call this, the middle. It retraces back to the middle, or it gives a good signal to break and start a new trend. So this one gave us a real good signal, and it started a new downtrend. As you see, the reason why I got the CCI on here is called divergence, meaning this CCI, what it does is it calculates momentum. So it's saying that a lot of people are buying here, and usually when it gets into the, you see how over here it says 100 and 100 is usually oversold or overbought. So overbought is at the bottom, oversold is at the top. So usually most people is selling. So you got a lot of people selling up here, and it made a high on here. It made it this high. And then it retraced. That's a retracement or continuation or flag, whatever you want to call it. And then it went back up and made a new high. Well, when it made this new high, it was higher than this one. So the price went from here to here, but the momentum stayed the same. It went from here. It's pretty much stagnant. As you can see, I got the cross, and you can see how they pretty much, the peaks was the same. So that's divergence, and it broke the band. So that gives a good clear signal to sell. So, you set your sell in there. Well, what I did is I didn't catch this before because I didn't see this. So what I did is on the screenshot that I sent you guys earlier, I got in on this engulfing, meaning that price dropped. And this is what I want you to pay attention to is, even though this looks like an uptrend because everything is going up, you got white candles going up. Look how many white candles it took to get back to this point. So you pretty much had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles to get to that point. But it's still within side 1, 2, 3, 4, 5, potentially 6 candles. So that's showing you that that's really not a strong uptrend because it's taking and it's dragging. So what I did is you take this Fibonacci and you take it from your high and you take it to the low that it formed. Now this is a good setup because it formed a price action pattern. So the head and shoulders is a price action pattern. The engulfing is a price action candle signal. So this is a pattern. You got patterns, meaning all the charts, all the bars or candles is making a certain pattern. Like they say, head and shoulders. This is a shoulder, comes down. This is a neckline. This is a head. This is a neckline, and this is the right shoulder, and then it dropped. but it dropped it retraced back up to the 38% retracement. Usually the 38% retracement is just a take profit. So usually a lot of people don't enter trades when they're doing retracement off the 38%, unless and I say a big unless it forms some type of price action. So if I would have got, like, I got this engulfing, meaning an engulfing chart pattern means that this bar right here, the black, engulfs the last one. It engulfed that last one, so the whole price range it took over that and it closed down. That's a good signal. So what I'll do is I'll see. Usually what I do is on the fibs, I use just fibs to check my price. But what I also do is I use the ATR, the 17 pips. I make sure that I have 17 pips outside of the price action to for my stop, and then I'll get 34 pips for a 2-to-1. So that's how you determine your take profit. Your stop is always going to be 17 pips or whatever the ATR is on any type of time frame. You could do a daily time frame. If I go to click daily, it's 64 pips. So I'll make sure that I have enough coverage to cover the volatility. This ATR measures volatility. So I'm back to the 1 hour chart. So I could take my, I'm gonna delete this fib. I could take my crosshairs and I could just calculate, 25, 21 plus 17. What's that? 38. 25, 38. What I usually do is I'll make sure to look at it, see 25, 38. Look at where 25, 38 is at right here. Don't worry about that dash line because that's where I had a sell limit to short it if it came back up to that price. But that's where my stop would be right here above it, 25, 38. And then what I would do is what I do is subtract 34 pips from there. So 25, 22 minus 34, that's going to be 25. That's 22 minus. So it's going to be like 24.80. That's going to take you somewhere right here. You see how it came down to here. So that's a 2-to-1 from right here. Well, what you can also do to check your take profit is you can take your fib, and as you see when I'm on a downtrend, I took from the top and go bottom. That's how you place a retracement. Well, to check your profits to see how far it may retrace to, you go from bottom to top. So now usually so Fibonacci, you could Google or YouTube Fibonacci ratios. I give you a lot of detail about it. So usually if don't worry about this. I know it says 61 here, but remember we're in a downtrend. I'm just showing you profit where it's going to take at. So usually remember it had 38 here. Usually when it goes to 38, it's going to, more than likely, what it would do is it would drop all the way or continue the downtrend to 138. I don't have 138 plotted on here because I try to be conservative when I take my profits, especially when I'm trying to take profits outside the previous low. So I put 123 just so I can always take my profits and look at where it's at, 123, and it's forming a base here. Now this still has the potential to drop a little bit lower to the 138, to the 138 mark. But that's just a quick tutorial on fibs and how to calculate profits. And this, what I also wanted to show you too, is another way that you could do it. So when you have a head and shoulders pattern, you have the neckline. Usually when it breaks that neckline, look at that, it breaks the neckline. It actually, see this, and this is one thing about this pattern, is that it still has the potential to go back down, because when it breaks the neckline, then it will go back up and retrace and then continue back down. So you see how it broke the neckline here, and then it dropped, did a little base, and then it went back up to it, retesting it. Now it's going back down. Well, right now it's still consolidating. So it still has the potential to go even further lower. But if you could always start out with your with the naked chart, with nothing showing on there, just so you don't never want to confuse yourself. I showed you 3 different entries. So this one entry was the head and shoulders pattern. When you're doing patterns and you're doing shoulders, everything always wants to line up with the support, resistance, or supply or demand zone. The reason why I put my sell limit here, so even if I didn't have no other indicators on here, I would automatically put my sell here, because this candle right here is a drop, base, drop. This candle right here is a zone, meaning that potentially people was trying to buy here, but the sellers overtook and it continued down. So when it got back up to that zone, it's a good potential that it's still going to go down. So you always want to look for zones if you're using patterns. Same thing with this one. I'm pretty sure this shoulder here lined up with the zone. So you see that? So I'm gonna delete this and I'm gonna show you. I'm gonna go to a 4 hours just so I can fit on the screen. So this was the shoulder. So this you really wouldn't be able to see the head and shoulders pattern so clear, but I would be able to tell because I know that it's closer. So you got left shoulder, head, down, right shoulder, down. It's a 4 hour chart. Like I said, this shoulder lined up with this zone. Look at this. This is called the zone. These are zones. I can even. So look at how price went into the zone each time. Look how price went into these zones each time. Even on this one, even on this candle, it went into the zone and it broke it. That's called the fakie, but it still broke it. That's another type of strategy. It still broke it, but it still went down. See, this is a zone, and then also this is a zone. You see how? So there you have it. This one has the potential to go down. I'm looking for some more trades, so I just want to send this tutorial or this educational, semi-educational video. Let me know if this helps.